Good afternoon, everybody. And yes, it is September morn. It is here. September has arrived. Everybody hug a fellow investor. Tell them to relax, remain calm, take a deep breath, much like Steve Emmerich was just saying, and recognize that September can be rough in the stock market. And we basically see that as an accumulation opportunity. So, with that, my name is Mark Robertson, and I'm joined here by my dear colleague, Ken Kavula. Good afternoon, Ken.
Good afternoon, Mark. I'd like to congratulate us both on our picks of United Therapeutics. And folks, if you've been coming to our roundtables and haven't put some money into United Therapeutics, you can feel really bad today. At one point today, it was up 40%. So I don't know where it is right now, and it might even be down, but we had our moment in the sun, and I'm feeling really good about it.
Yeah, it tacked on a couple percentage points to the Buttonwood portfolio, so we're obviously grateful for that. Well, our Scandinavian Kim Butcher has returned. Good afternoon, Kim.
Good afternoon, everybody. Vacationing is wonderful. It's just coming back is the payback.
You didn't come back with a Swedish accent, Kim.
No, but I brought Swedish chocolates, a new Swedish, new wool sweater. I did have my priorities straight. I think I bought chocolate from every country I went to.
So you're well equipped with the recovery medications to get you back on track.
Well, let's just say that I think I've done 5 or 6 loads of laundry. I only think I got one more to do.
All right. We're also joined here by Houston's Matt Spielman. Good afternoon, Matt.
Good afternoon, Mark. Good afternoon, everyone.
We actually have sunshine up here, Matt.
Great. Happy to share. I got my morning walk in at 75. It hadn't sweat so little in months.
Matt, Natalie, and I went out for breakfast this morning, and it was 48. Oh, and we had killing frost in August, not in our area, but about 50 miles north of us.
Yeah, that's crisp. Crisp morning. All right, and we have a special guest this week. She is one of our legion of small company people that hangs out for the next few weeks. We hope to have her involved between now and Halloween. It is from the Rocky Mountain chapter of Better Investing, our friend Betsy Wills. Welcome, Betsy.
Thank you so much. Hi, Mark. Hi, Ken. Hello, everyone. Pleasure to be here with you today. Thanks for asking.
Yeah. Betsy, is this the Rocky Mountains that Mark has pictured, or is this the Alps?
I'm not sure what that is. I was actually trying to equate it to Wyoming because we're going to be talking about Wyoming companies, a couple of them today. But those aren't the Tetons, so I'm not sure what that is.
There's a good small company in them thar hills somewhere.
I see you've given us Swiss hats, however, Mark, okay?
Yeah, we pretty much had to settle for whatever we could find at the time.
Okay.
All right, and we will continue our discussion on foundational selling, and let's go ahead and get underway. All right, we have a special disclaimer. I'll start with my part, and Betsy, you can chime in. First of all, no investment recommendation is intended at any part of this. This is about education, and you are reminded to do your own homework and make your own decisions. We can't tell you what to do. Make your own decisions about anything related to investing. And the red disclaimer there is Betsy's extra special reminder that she's going to be talking about some, dare we say, non-core companies, Betsy?
Yeah, definitely. So I usually give a disclaimer or maybe a caveat before I do these kind of presentations, because the SSG only provides partial information you need. The FBI always says you can get 80% of what you need to know for a stock using the SSG, but with small stocks, it's just the opposite. You only get about 20%. So the rest is your own research. And because 3 of the companies we're going to be talking about are not profitable, they have no earnings, the SSG and the PE multipliers are not going to be very helpful to you. So, and one of the tenets of BI is to buy it at a reasonable price, but that's going to be up to you to try and figure that out. And again, my caveat that I always mention to my investment club, this is not your rent money. Don't put anything in here that you need for anything else. This is not your rent money. So
All right.
thanks for including that, Mark.
Okay, and Ken, you may have to do some pacing or some deep breathing to, she's going to
Mark, I've been with you and Matt long enough now that I can handle any of this. Okay, I got over it at least a year ago with Luminar, and maybe longer than that. So
I'm still not over it. More on that later. All right. If any of you guys out there want copies of slides, or if you have questions or suggestions, and if you've got a good small company that we have not yet discovered, bring it. Our 2 email addresses are there at the bottom of the page. Anything else, Ken?
No, I think we're ready to move on, Mark.
All right, here's our Portillo's moment. I would say that the image, which was provided by AI, ChatGPT, kind of captures my spirit right now. And what we have come to find out that on Ishimoku Cloud graphic, which again I don't understand, other than I think ketchup is bad. There's more ketchup than relish on the chart, so I think it's bad. But here is some of the specifics, and again, with a fairly young company, this kind of dovetails with Betsy's remarks. If they disappoint, and when you trim your growth forecast from 10 to 12 down to 5 to 7, it makes investors and traders unhappy. And that's why the stock price has been punished. So my message this afternoon is those of you living in Texas who have been kind of whining about Portillo's lately, and you have a new restaurant opening up in Atlanta, we need you to get out there and help us out. So I am a
Mark,
shareholder.
I did get one email in the last week urging me to resist the hot dog in the small companies list, okay?
Okay, who is that person so I could take them off my Christmas card list?
I'm protecting my sources. All right.
Protecting your, all right, moving on. All right, happy Labor Day, everybody. Hope everybody had a great weekend and a great day yesterday. Neil Diamond makes his appearance there with September Morning, and just good times all around. Talk about Gentex a little bit this week at Manifest, but it is back to school, and let's press on. Here's what
Mark, we did get a serious question from the audience. Nick would like to know, what AI engine did you use to generate that kind of thumbnail for Portillo's?
The sad hot dog. I'm pretty sure it came via chat.
No, not the picture, but the on the left hand side, the discussion.
I think that is ChatGPT. It could be Perplexity. And I have been using Claude more, so it would be one of those 3.
Okay.
That's the danger of AI, is getting your engines mixed up, and you wonder why it's inconsistent?
Well, yeah. I mean, I'm just adding to the already existing confusion. All right, I will try to remember to put which one did what. I try to remember that, but I don't always.
Maybe the answer to that is the one riddle with the 2 guys, and one always lies and one tells the truth. You have to ask Claude what Perplexity would tell you about Portillo's.
There you go. I haven't used Grok in a while, though. They get into a bit of a battle from time to time. All right, so I'm inundated right now with a number of articles from people I respect that talk about the overvalued market. I guess maybe they're just trying to set the table for September, but I don't see the market as tremendously overvalued. What do you see, Ken?
According to these graphs, Mark, things look like they're pretty much in line with everything else. And listening to the talking heads, where they're giving me all kinds of numbers for the market, minus the top 7 stocks or minus the top 12 stocks or whatever flavor they're using. If you take the top performers off the list, I certainly don't think it's overheated. With all that being said, I also don't think that you can come up with with valid numbers if you're going to choose to cherry pick which of the numbers you delete from the list. So I'm noticing, and our audience is noticing, that Prove is not on here right now, Mark.
Yep, Prove is in the middle of a reconstruction moment. I just wanted to make sure that I got all of the columns. We'll talk more about this, but I'm basically auditing the entire database, and we will be making a move away from Y charts soon. And we'll talk more about that probably next week. Okay. And our quote there from Louis Rukeyser. We haven't heard from Lou in a while, so I grabbed that. That is definitely ChatGPT, Nick. And it's kind of fun to hear. I can actually read that, and I know many of you do too, in his voice. I mean, I can hear it. I'm showing my age here a little bit, Ken, but I remember Wall Street Week and Friday evenings with Lou. So he mentioned Margarita.
I used to watch it faithfully, Mark. So, yep.
All right. So the takeaway here is the average stock right now does have an 8 or 9%, and again, average return forecast. So that's just kind of a benchmark to go with. All right. Here's our performance perspectives. I put it back to a 10-year look back period for most of the entries on here. You will see a couple special entries going back to, in one case, 1993, in another case, 1980. Those different time frames required that we switch to an S&P 500 benchmark. The rest of them are Wilshire 5000. And things are going along fairly swimmingly. Again, our favorite companies in our community are all right up there, looking pretty good over the trailing 10 years. Throw Visa in there too, Home Depot, Ford. Those are all good. So those are our most widely followed companies. The only exception that's been misbehaving, and it's actually been behaving pretty well this year, but not for the last 9, is CVS Health. And hanging in there. And Buttonwood Bulls. Ken, we can do a couple cartwheels. Checking in at 4.3.
We're going to have to reorder the list now, Mark, on the total return, and so Buttonwood won't be at the bottom anymore.
Well, if it keeps going as it is today, that's going to take care of itself. So let's hope for the best. So let's talk a little bit about ADP and O'Reilly. Got a kick out of this. I think there are times when it makes sense to listen to grumpy old men. And no, I'm not talking about riding in the car with Ken. This is a pretty cool deal. I mean, Chuck Allmon is the gentleman at the top of the slide. He wrote a column referred to as the Growth Stock Outlook, one of the top performing stock selection features that Mark Hulbert has ever seen. And we used to feature Chuck Allmon at Better Investing on a regular basis. So basically pointing out that both he and Ralph Seger, ADP was one of the original selections of the Investor Advisory Service, at Better Investing. That's Ralph Seger there at the bottom. And you look at some statistics over there about ADP on the right. I just have a hard time getting my head around $1,000 in 1980 now being worth $661,000, literally 45 years later. So I think that's kind of a wow moment. Any thoughts, Ken?
Well, it reminds me, Mark, of what I only met Tom O'Hara in person twice, and I only really talked to him once. And that's when I sat next to him at the rechartering of our chapter back in 1995, and I sat next to him for lunch at the luncheon that we had before we were going to listen to our speaker. And he explained to me that he wasn't really that good of an investor, but the only advantage that he had was that he lived a long time. And I think that's doubled down by the fact that if you can put together 35 or 40 or 45 years of investing, you stand to make quite a bit of money. And maybe you make it even in spite of yourself rather than because of yourself.
Yeah, and I see something like this, and ADP has been a pretty solid company for 45 years. I don't, it's kind of like the way we think about Visa, the company, at least over the last 40 years. And I don't know, it's just amazing when you see some of these numbers. Kind of dovetails with my mom and dad's story about Allmon. All right.
And Mark, ADP is still appearing in industry studies that my clubs are doing, which means that it's still an actively sought after stock, and it can compete with some of the best in the industry and in the sector and in the whole stock market itself. It can compete even today. You look at the visual analysis for ADP, and it's textbook, up straight and parallel.
Yep, they're still there. Formidable company. I think this is a formidable quote. This is straight from Chuck Allmon. Again, he did a lot with Better Investing in the National Association of Investors. That particular picture is just for just to show some of the citizens of this community. That's actually from the San Jose National Convention. They are waiting for Peter Lynch to take the stage in that photo.
And I'm going to jump on it, Mark, before somebody in the audience jumps on it. That is not me in the second row into.
Okay. You're not in there, are you?
No.
But this is a pretty powerful quote, and it gives you some perspective on a very accomplished professional investor and his exposure to our community. And just kind of neat when you think about what was going on in 1974, some really rough years in the stock market. And, he's basically saying that hanging out with our bunch of people was pretty refreshing. So, good quote. So what else is new? All right. And then one last slide. I actually had a front row seat for this one. I was a member of the Mutual Club of Detroit. We've talked about O'Reilly a number of times here at Bull Sessions, but that's a factoid up at the top, George Nicholson, and then followed on later by Tom O'Hara. Every single investment club meeting, they would walk in and say, "What small company will we discover tonight?" I heard virtually that a version of that the first time I visited the Mid-Michigan chapter several years ago, Ken, and I give you credit for that. So some pretty good numbers here also. And Ken, do you still own this in the Mid-Michigan Model Club?
We still own this in the Mid-Michigan Model Club. We bought it in 5 or 6 lots originally back in the maybe 20 years ago, Mark, maybe 22 years ago. And we've held it for a long time. We've sold it more than occasionally because it's gotten to be too huge a piece of our portfolio a number of different times. Our first buy was kind of interesting because it sat on our pounce list for maybe a year, maybe 14 months even, nowhere near the buy zone. And then one day it was in the buy zone for a small amount of time, and we bought our first lot of it back at that particular time. But we still own it, and I don't think we're ever going to sell all of it in the club, although today the growth rate has slowed a little bit, and the par value is not where we'd like to have the par value for our entire portfolio, but it still serves as one of the very large companies that we think belong in the portfolio. Extremely high quality company on top of that.
And I can remember the gurus in the Mutual Club talking about how meticulous these guys were about expansion, how careful they were and strategic about as they grew the company, out of literally the heartland of the United States and expanded out from there. So good stuff. Powerful returns. Again, 6-digit numbers. If you had the audacity to actually hang on to a chunk of it for the last 30 years. Good stuff. All right.
Mark, before you go on, I just
Yeah.
wanted to highlight the question at the top of the slide where he walked into the investment clubs and he said, "What small company will we discover tonight?"
Yeah, they were obsessed by it. And I'll put together a slide with Aflac because they found Aflac in the 1960s.
Oh,
So, and I could remember our cost basis was, I believe, 16 cents. So, I mean, think about that. They pay twice that in dividends every quarter. It's amazing when you see it happen. Thanks, Betsy. All right. Well, I'll go quiet here. Although I before we start this page, I do want to point out that I was in 205th place for a while, and I'm now 73rd. So that, everybody on this list should be looking over their shoulders.
Hallelujah. There's hope for everybody, Mark.
All right. What do you see here, Ken?
I really like what Bauer City ladies and what Broad Assets are doing. And a shout out to the Golden West Model Club that moved up 7 points in a kind of a teaser kind of a market. Lots of ups, lots of downs in the last week. I think that things are starting to get to the place now where we're getting a fairly consistent top 25. It'll be interesting to see how the rest of the year proceeds. But we're down to only 10 clubs in the top 40, and that's not something that I like to see. I'd like to get that back up to beat that record that we got of 12 clubs a couple different times in the past 6 months. But, the top 10 have kind of stayed consistent. Although Steve Weaver has moved up from 15th to 10th, which is an interesting move in that top group of folks. Usually I'm looking at that top group and seeing people only move 1 or 2 spots. So a move of 5 in either direction bears taking a serious look at.
Yeah, it is getting interesting. I'm just fascinated by the fact, though, that those 3 clubs up at the top, they have 8 annual championships among them. 3 for the top 2, 2 for Golden West. And to see these repeat champions, that actually crushes statistical probability type stuff. There's something going on there. And good, clean fun. And
I do find it interesting, Mark, that there's not a single asterisk individual in the top 50 except for Andrew Spector.
Yep.
So that our individuals have not been able to be as nearly consistent as some of our clubs have been able to do.
Well, I've been consistently frustrated.
I didn't use consistently bad or anything like that, Mark. I was being kind. Okay.
All right. Well, the monkey's still at -3, so we're happy. All right. Oh, and by the way, a confession. The standings for the groundhog, I'm going to try to figure out how to fix this, but I have forgotten the password and I have no way to retrieve it. And I know the guy that runs the site, so so the repairs are not going to be all right. More on that later. How do you lose a password when it's a situation like that? All right, here's the Buttonwood portfolio. Woke up this morning to, as Ken said, after the market opened today, United Therapeutics was up 40%. That's $100 tacked on, and that's fun. And having some pretty positive effects. And pretty good collection top to bottom. Nobody's running away, and report card looks pretty good. So we will be taking a closer look at this portfolio next week, looking for a home for approximately $125 in cash.
I didn't check to see if our friend Ann Manning is with us this afternoon. She's not, but Ann is the champion of Deckers, and if United Therapeutics wouldn't have been in the news with all that huge gain today, we would have been focusing on Deckers, which is one of the only other stocks in any of my portfolios that is green for the day. And the last time I looked, Decker's was up about 2% plus. I know somebody in the audience will tell me what it is right now, but it's up about 2.5% the last time I looked. And that's been one that we've gotten a little bit of heat from about picking it at the wrong time, right, Mark?
Yeah. Yeah, I'm used to it. Just everybody take a number if you're gonna. All right, so here is a look at. We've been kind of tinkering with this as a kind of a tracking graphic for the portfolio, from the balance in blue to the objective 5 years out in green, and then we're tracking the portfolio par week to week or month to month. And then Ken requested that we put the rate of return on here, and I already told him I refuse to go back before that fifth dot and graph anything under -5%. So you can beg all you want. I'm not going to scrunch the graph. And we are up over $100 today in the portfolio, and actually tracking at about 6% on the rate of return since inception. So we're seeing a little bit of recovery, and of course Ken and I will take credit for never grumbling and being patient. We might have to go back and erase a few bull sessions, Ken, if we'd make that claim, but
yeah, for those of you having a difficult time with the y-axis on this graph, two of the lines use the right-hand y-axis, and two of the lines use the left-hand y-axis. So if what we're talking about is measured in percentages, like par and like rate of return, then please use the right-hand axis. If it's measured in dollars, like future value or buttonwood balance, then please use the left-hand y-axis. And that should simplify matters for those of you trying to figure out how value can be up over 15% with all the rest of the numbers not doing real well. So,
yeah, it's a bit tedious of a graph, but I think it's going to be a fairly powerful message as this thing gets a little bit more time under it. All right, moving on. Here's our public service announcement. I'm just repeating what we put up last week in response to a number of questions and, dare I say, accusations that we had received. Yeah, we think cash flow is important, but we don't think it's the only thing you should look at. And we're just basically underscoring the fact that we think it's a useful component of thinking about. I mean, now you've got up, straight, and parallel in 3 dimensions there, Ken, on the right. I think it's a worthy thing, and I need to put wasn't it Charlie Munger that said? I need Charlie Munger in here too. I think he's the one who inspired the whole thing to begin with. So
yeah, Charlie's quote about his alternate or true definition of EBITDA.
Right.
BS earnings.
Yeah, and he's just basically saying it's hard for a company to grow faster than its cash flow, over its longer term track record. Good stuff. All right, let's talk foundational selling. We kicked this off last week, and we talked about it a tiny bit at the roundtable. These are companies that Ken has put on the hot seat. So Ken, I'd like you to describe, what are you thinking? How are you scratching?
Well, I looked at some things that I kind of thought were major problems with companies. I don't like to have a company, for example, in my personal portfolios with a par value, that's a return forecast, that begins to approach 1. And so I set kind of an arbitrary number of 5. And I said, let's look at those companies that have a return forecast at 5 or less. I definitely don't like to have companies in my portfolio with qualities of less than about 2/3. I think the highest I can go most of the time is up around the mid 60s. So when I see quality ratings that are less than that, that bothers me a little bit. And then the most important factor that I watch in my portfolios is sales growth, because everything that we do as far as investing is concerned is based in what a company can sell. And when a company can't sell things, then it can't earn any money. And if it doesn't earn any money, then it cannot have a stock price appreciation over an extended period of time. So I'm looking at growth forecast, and again, I just arbitrarily said, if a company is growing at 5 or less, I'm a little bit concerned about it. So I gave Mark 3 different lists, and he's put them into a single spreadsheet with a couple of other factors that we're looking at. Mark likes to look at RSI as well. I'm still not convinced that RSI is telling me as much as some people think it might be telling you. And so when I see really high RSIs, I know that the market says the stock is oversold. But I don't use that as a sell signal. When I see really low RSIs, I know that the stock might be on sale, but at the same time, I don't use that as an automatic buy signal for anything. It's just a piece of information. I told Mark that I was willing to move at the round table to sell every single stock on this list, with a couple of exceptions, and I'll go through the exceptions really quickly and give you my reasons for them. The first exception is the third one down, Service First Bank shares. When I first made the list, we had a completely different set of numbers for Service First, but as Y-Charts updated their data, and then as we've migrated the data, beginning to migrate the data, we're finding that Service First numbers are really very different than we first imagined them. And I'm not really looking at anything that I think would be a particularly bothersome number on any of the Service First columns right now. So with that in mind, I think that we keep Service First. The next one on the list is down.
So I'm attached to it.
Okay, great. And it's Mark's pick, so we certainly don't want to sell anything that Mark picked.
No, that's right.
So I'm going to go down the list to a Matt Spielman pick, Interactive Brokers. I put it on the list because of a par that was just around 5, but with sales growth forecast of around 15% and a relative return around 80%, I just don't see any reason at all to remove this one from the portfolio. I really think that this is a stock that hasn't settled in yet. We have all kinds of explosive things happening, both positive and sometimes negative with the stock. And since we only bought it just almost exactly a year ago, I'm ready to hold on the roller coaster and ride it for a little bit more time. I think Fabrinet, the one right beneath it, belongs in the portfolio for much the same reasons. We've owned it for about a year and a half. It has a very high relative return and a really great sales number. So I'm willing to put up with the low par for the moment. Both of these companies have exceptional quality ratings. We go down the list to Halozyme Therapeutics, and the only possible sell reason right now for Halozyme is that RSI. It might be a little bit oversold, and you might be at a high point in the market. And if you're the kind of person that likes to jump in and jump out of stocks, then it might be an opportune time to do something with it. But I'm looking at 25% growth forecast. I'm looking at proved numbers that kind of verify the par number. In fact, the prove is higher than the par, and that's something you don't see very often. Maybe our par number is a little bit low for this stock. It has a good quality at 72, has a positive relative return, and heck, we've only owned it for a couple of months, so I say hold on to that one.
Definitely.
And then the other one that we might want to do a hold on is the KLA holding in the middle of the list. There's not a lot of really extra positive things to say, except a very high quality with a really nice relative return and a growth forecast that might still be interesting in almost any portfolio that you put together. Growth of 8% shouldn't be sneezed at. It's not anywhere near the kind of growth that's under 5%. And when you have growth of 8%, that might be indicative of a really good, solid mid-cap stock or medium-sized stock, or maybe even a really, really good large-size stock. And we should have those in the portfolio for the stability they offer a lot of times. So I'm also looking at their proofs for KLA, the 2 lots. And the proof for the 2 lots, again, is coming up to be 60-70% higher than the par value, which might indicate the par value is a little bit to the low side as well. So all in all, I would move the list except for Service First, the 2 KLA lots, Interactive Brokers, Fabrinet, and the 2 Halozyme lots.
Okay, I generally agree with those comments. We're going to take a look at MKS Instruments by itself. On Halozyme, it's brand new, and the fact that it's red hot, those type of companies can stay with a high RSI. They can stay that way for a long time, so I'm not bothered at all by that one. It's a brand new holding. Luminar does have an event coming up that could affect the value dramatically. It's not going to affect the portfolio much at all. Notice Ken had me put in the percent of total assets, so you can see that's a microscopic position. But if the Mercedes-Benz, that's later this month, right, Matt?
Yeah, the Mercedes-Benz CLA launch in the U.S. anticipated for this month to officially open.
And that could bump it in the right direction. The company.
Yeah, it would be the second confirmed passenger car customer in production. So on their plan, basically.
Right. And so it's had a rough run. I mean, and they literally are kind of staggered and hoping to have enough runway to get their product to market, is the way I would describe it. So very, very speculative at this point. So Betsy's warning here applies. I did put at least one rent payment into this one, Betsy, though, so I'm feeling the pain here.
Need somewhere to stay next month?
We might be doing a workshop on tax losses as a benefit. And Luminar might be the poster child at that point. But I basically agree with all these, Ken. I think I might be inclined to hang on to Ann Manning's Houlihan because, 7.5 literally is 8%, and it is still an excellent quality company. But that really is the only one that kind of jumps off at me. And I do think that MKS is an illustration of selling a company without regard for the return forecast. Well, with less regard for the return forecast. Let's say the return forecast is 12. That is somewhat attractive. But like we've been saying, and we have witnessed with a number of companies, when this is happening, it probably shouldn't be ignored. Now, this is a formidable company providing products and services to a whole bunch of different semiconductor companies. There's really nothing wrong with it, but it appears to have changed or done something. This is pretty much a kind of a flatline condition here. So that just kind of raises a question mark, but the quality has been kind of dropping off. So again, not a terrible company, but with that quality dropping off, and Ken asked the question before we got started today, well, what's driving that? There's a couple of things. They have had financial strength reductions in the value line grades, but what really seems to be driving that is the long-term debt is pretty substantial, almost up to $5 billion. This is a pretty hefty number. So what that has done is driven this financial strength rating down to basically a C plus rating if you put it in value line lingo. And so that has been driven down. The EPS stability has also been fluctuating quite a bit in recent years. I'm sure that has also put a dent in this number over the last few years. The net result being this decline in quality. You can see that the profit margin has also come down from where it was. So it kind of gives us a look at those influences on the quality rating or ranking, Ken. Anything else here that we're missing?
Well, the thing that drives it home for me, Mark, if you go back to that chart that you had of all the stocks that we're looking at, the thing that drives it home for me, one more backwards, I think that one, is that if you look at all the MKS lots, we've owned this stock since 2019, and we put it in 2020, 2021, 2022, and this is not something that we've just suddenly decided is a really good stock. We like this stock a lot, and I'm certain that when this stock was recommended by Cy and seconded by the audience, I'm certain it did not have growth forecasts of under 4%, and I'm certain it did not have quality rankings around 40.
Mm-hmm.
And when you talk in that kind of language, and when you say to yourself, well, what were the growth forecasts back then? What was the quality rank back then? What were the expectations? We have to admit that the expectations were probably much, much, much higher than they are for this particular company right now. I like to view this as not falling in love with a company just because we've chosen it a number of times. We have that idea of the rule of 5, and sometimes companies just don't work out. And this one just hasn't worked out for any of the things we thought it was going to do.
So what I'm hearing you say, Ken, is we sell all of these positions and we keep this one?
No, I'm not selling. I'm not keeping your position either, Mark. Yours is the oldest position.
I know. I was first to the party.
Giving you the most time, Mark, to make hay.
All right, 7 years. I guess that's enough patience. All right, let's go ahead and move on. We will make those moves, and we'll come back to a version of this list on a regular basis.
And Mark, I can live with Houlihan Lokey staying in the portfolio, and as long as we put some kind of an asterisk to go back and visit Luminar in a maybe 6 weeks or so, I can live with Luminar. I understand the value of having non-traditional stocks in the portfolio.
Absolutely. All right. Let's talk our small companies real quickly. We want to get to Betsy. We're running a little bit long. Here is our up-to-date statistics for this year. Those are our 20 stocks, including a couple creative entries that have worked out fairly well. We're not going to dwell on them other than to point out that without jinxing ourselves, we are running at about 27% versus a market at closer to 15%. So we have a lead. So we will just leave it at that for right now. Pretty good performance, though, from this group. And I'm sure we'll talk more about it. There's no big disaster, rule of 5 disaster down at the bottom either. So, hey, look at this one, Ken. This is down here. So that one is now just today done this. Cool. All right. Here's just a quick reminder, courtesy of Ben Carlson at Ritholtz, that the last few years have been challenging when it comes to small companies. And here's our own reminder. We take a look at the value line arithmetic average, and we basically deduct the S&P 500. So we're looking at the S&P 500 versus the value line 1200 that are not S&P 500. The red, that's the red. So the red would represent the medium and smaller companies in the value line investment survey. And you can see that that's kind of a special moment on the far right where the S&P 500 has caught up. All right, so again, we're going to start this process of going through a number of resources over the next 8 weeks. And I guess, I would ask anybody out there for their favorite pings. I'm going to say all of the above. I think we enjoy taking a look at all of these, but I'm going to show one when Betsy's finished that is rapidly becoming one of my favorites. So I'll save the mystery on that. Ken, what's your favorite place to turn to?
Mark, I just continue to do what I do every day. And I'm not looking at any special places. I really do like the lists when they come out, but they don't seem to be as opportune for that October 31st date as they used to be. So they're not as helpful if they were a year old. So I'm looking at that. I'm always looking at that small companies list that comes on a predefined screen from Better Investing. I'm always looking at it. That means like twice a month or even 3 times a month, looking for something that might pop up new. And I'm listening to a couple of people in my talking heads that I think have a pretty good idea of what small company means, not necessarily small cap, but small company.
How about you, Matt?
I think a picture of Tom Lee might be in order on this, this chart, Mark.
We'll throw Mr. Lee on here. We also want to include AI. So that'll come in here somewhere. How about you, Matt? What's your favorite go-to for?
Yeah, I think the same thing. I echo what Ken said. I actually really like the Better Investing ticker heat map, just because it's kind of it's colorful, but it's sort of a different way to see what people are interested in. I found Vital Farms right on Manifest. I just did a quick Manifest screen, and there it was, and I had no idea what it was. And necessity was the mother of invention, and I really like it. I found, if you recall, Shockwave was a random CNBC discussion. It happened to be when I was going to pick up groceries. Really? So yeah, sometimes you definitely have people that if they talk about something, you listen at least enough to spend your own time to investigate it. And sometimes serendipity happens, and you're just fall on it, and then it's your opportunity to take up or not.
How about you, Kim? I know you're still decompressing, but any favorite places to turn to for small company ideas?
I like going to the value line, small cap list, and the special situations list.
Yeah, they deserve a spot on here too, so we'll be redoing this slide. Good stuff. And last but certainly not least, Betsy, what's your go-to for ideas?
Pretty much everything. And including one that I'm going to be talking about. 2 of the companies that I'll be talking about came from the Cowboy State Daily, which monitors, I kid you not, it monitors all the activity in Wyoming. So I would encourage all of you to add the Cowboy State Daily to your subscriptions.
Oh, I feel a Yellowstone slide coming on for you in the future session for sure. All right, we will.
They have great cartoons.
That's it. You can't give Mark that much ammunition, okay?
We're on it. Yeehaw. All right, so with that, Betsy, why don't you take us away and demonstrate? Now, I'm going to accuse you up front. You're trying to steal some of those speculative spots, those 1 or 2 magic ones in the final 20, but go ahead. Take your best shot.
We'll see. I just, okay, so let me start by putting today's presentation in some perspective, especially for the small companies with no earnings. And that's the executive order that was issued on March 20th, 2025, called Immediate Measures to Increase American Mineral Production. And it pertains particularly to rare earth and critical minerals, as well as other things. But the salient points of the EOs pertaining to rare earths and minerals are to cut dependence on the foreign, especially the Chinese critical minerals. And critical minerals are defined as rare earths, uranium, copper, potash, and gold. Second is to streamline permitting and prioritize domestic mining on federal lands. Third is to mobilize financing and investments via certain of the governmental organizations, including the DoD and the Small Business Administration, and establish a stronger domestic minerals base from raw materials and final products. So what it signals is a long-term U.S. commitment to reshoring of minerals production. And each of the companies I'm going to be talking about today stands to benefit from that. For us as investors, it could also boost our stocks, especially for the companies in rare earths, lithium, and uranium. So what we're really doing is balancing the speculative upside with the long-term potential within industries with big growth potential. This underlying deficit and continuing in rare earths and uranium, the current availability versus what we're going to need in the future is what we're talking about. And, to a certain extent, it echoes Ken's comments on sales, because each of these companies then would have increased sales. I'm also reminded of Jeff Bezos' philosophy that given a 10% chance of 100 times payoff, you should take that bet every time. So you asked about how I find stocks, so I'll talk about that as we go through. It's a question I'm often asked as to where I find these stocks. So the first one we're going to be talking about is MP Materials, and you can see that Mark has up the value line on MP Materials. Actually, I know that some of you are probably been aware of MP Materials for several years, but I first became aware of it when it was presented at our investment club by a couple of my partners, one of which I think is online with us today. And this company has no current earnings, but it had earnings for 3 years or so between 20 and 23, but not in 24. This company owns and operates the Mountain Pass mine in California, which is one of the world's richest and most prolific sources of rare earth elements. And it's actually southwest of Las Vegas. Now, this is kind of a turnaround in a little bit of a way. Historically, after mining this ore, MP processed it into concentrate and then shipped it to China. And China dominates the global market, for these complex, high-margin processes that refines concentrate into the usable rare earth oxides that are needed for modern technology. But now they have a facility now. They have a stage 2 separation facility, and it's been completed so that everything happens on site. The extraction, the separation, and the refining all happens on U.S. soil. Now, the largest segment of the rare earths market is dominated by, and I'm to look up how to say these words, neodymium and praseodymium. It's abbreviated as NdPr. It's the largest segment of the rare earths market. And it's critical to making these magnets that are used in electric motors, hard disk drives, and so on. It's the strongest kind of permanent magnetic magnet there is. This market demand is growing about 8.5% through 2040, they see, driven by demands for electric mobility, industrial, robotics, and defense as well. So in 2025, there were 3 significant developments in addition to getting that plant online. In July, the Department of Defense, which may be renamed, I guess, and MP formed a public-private partnership to produce rare earth in the U.S. It has a 10-year agreement with a price commitment of $110 per kilogram for their NdPr products. They also agreed, the DoD agreed to purchase $400 million of MP's convertible preferred shares with a conversion price of a little over $30 a share. So that's the first major development. The second one is they also entered into an agreement with Apple, where MP is going to supply Apple with recycled rare earth feedstock that they process at the California plant. And they will supply Apple with this rare earth feedstock and ramp up and able to support Apple's devices manufacturing. That's about a $500 million supply deal. And last, in July, the company raised about $650 million through an offering about $55 per share. So they got some money from the public market as well. They had a pretty good second quarter this year. I won't go into the results. You can look it up if you're further interested. They did post an 84% revenue growth and a 24% adjusted EPS growth. And again, they've ceased all their shipments to China. So analysts estimate the company will achieve a 50% annual revenue growth for 2025, again, driven by this growing NdPr oxide production. Their competition is Neocorp, which we're going to be talking about next, some other companies and whatnot. So I noticed, Mark, you had some notes or some red marks on that value line. Do you want to have some comments on that?
Well, yeah, we actually picked this one. This was a Ken Kavula selection. He detailed the battery business back a couple of years ago, and we got kind of scared off. It's come up in our screens the last couple of years for best small companies, and probably would have been okay with the 23 batch, but the 24 batch, we missed about a 400% gain. The stock went from $10 up to $35, during the current run. So it just, again, is another reminder for us to don't be afraid to go back. The other thing that is really shown on here that we talk about frequently with this type of company, when they disappoint, the investors really get disinterested. And what you see here in that drop from 22 to 23 in revenues or sales, that's when they basically began getting punished. And no, Ken, I'm not going to change the title to Portillo's and look for the same pattern. But anything else you'd like to add, Ken?
No, except that the company is very interesting again, and has been interesting to me, Mark, since the much promised refining plant, if you want to call it that, whatever their new plant was actually doing. That much promised plant is now online, and so it becomes much more interesting to me. Betsy, did the quarterly earnings actually go positive for this company?
I believe so. But I don't have that right at the tip of my on my notes here.
Take a closer look, because now we're basically talking about a relaunch pad. I mean, it launched once, and now they're back in launch pad mode. So could be interesting. All right, I couldn't find a whole lot of information on this one, so I can't wait to hear what you have to say, Betsy.
All right. Well, Neocorp is a small Nebraska mining company. It is not profitable. It is a competitor of MP. And I heard about this one when the CEO was interviewed in about a 10-minute segment on Maria Bartiromo's show on August 6th. So you could probably go back and find that on YouTube. They talked about it quite a bit. So the Nebraska project is called the Elk Creek Project. It is one of the few projects in North America that's positioned to provide a domestic supply of, here we go again, niobium, scandium, titanium, and other rare earth elements. So in case you don't know exactly what these are, what they're used for, niobium is utilized for high strength, low alloy steel production. Scandium is one of the strategic metals. It increases the strength of aluminum, and it's used in fighter jets, satellites, aerospace, and automobiles to make them lighter and stronger. And it's primarily produced in China, Russia, and Ukraine, and it hasn't been mined in the U.S. since 1969. So this is quite a find here in Nebraska. It's about 226 acres of deeded land owned with additional mineral rights of about 40 acres. Now, a feasibility study for this project was completed in 2022, but it did not include the rare earth elements at that time. So they need to go back and update it. Nebraska is a very mining and exploration friendly jurisdiction. Now, this company also received a $10 million award from the DoD to support the development of the scandium supply chain, similar to the agreement between MP and the DoD that we just talked about. Another interesting thing about this company is it already has offtake agreements in place. So that enhances its ability to secure financing and, of course, develop the project further. And they're well-known global commodities trading companies. It has 2 contracts with a company called Traxys, which is a worldwide raw materials trading company. And the Carlyle Group has a majority interest in Traxys, in case you know that name. They also have a contract with ThyssenKrupp Metallurgical for 50% of their ferroniobium production. And with a possible 10-year agreement and a possible extension on that as well. So they're projecting that these offtake agreements to date have a value of between about over 2.6 million to 2.8 million. And then they also got an agreement with Stellantis, which is the world's 3rd largest automaker, and they are going to take their magnetic rare earth oxides there as well. So now here's some interesting facts about Neocorp, in case this is kind of passing you by. They've been publicly traded since 2008. They did hit a high of over about $13.60 in July of 2021 for some reason. But Citadel Advisors, which is Ken Griffin's hedge fund, according to a filing with the SEC in the middle of July, bought almost 4 million shares of Neocorp. You might know that Citadel Securities is one of Wall Street's biggest market-making firms and is responsible for 1 out of every 4 stock trades in the U.S., according to Forbes, which I did not know. And you might have heard of this guy, Kiran Quasi. He's a phenom, a engineering phenom, math whiz, and he's 16 years old. He has graduated from the School of Engineering when he was 14. He's been at SpaceX, where he was a software engineer on the Starlink project. He just left them to join Citadel. And he's going to be doing quant development there. And again, Citadel just bought this huge stake in Neocorp. So that's Neocorp. The next one, Mark, if you could advance the screen, please.
Betsy?
Yeah, go ahead.
Just for pronunciation's sake, I just checked, and that's either niobium or neobium, just like it's either Neocorp or Neocorp.
Hey. Thank you. I didn't look that one up. That's good to know. Okay, so Ramaco is next. This is a small company again, another competitor of MP. It is been profitable for the last 3 years. I learned about this one again in the Cowboy State Daily. Encourage you to subscribe to it. Its primary business has been developing and producing, mining and producing high quality, low cost metallurgical coal, which is essential for steel making. And its mines are located in Virginia and West Virginia. But in July of this year, it officially opened the Brook Mine, which is outside of Ranchester, Wyoming, which is near Sheridan up in coal country in Wyoming. It's the first rare earth mine to open in the U.S. in more than 70 years. It's aiming to produce magnet grade REEs, or rare earth minerals, without generating radioactive waste. Now, Fluor is working with Ramaco, and they have developed a preliminary economic assessment and found rare earth concentrations as high as 10,000 parts per million, which so far appears to be unique among coal accumulations anywhere on Earth. They concluded that the Brook Mine project is both technologically and commercially feasible, and they will also be designing a mining and processing demonstration plant in addition to this assessment, which they anticipate will come online this year or next year. And they've got great service up there for the coal. The Burlington Northern Railroad and I-90 both go through that part of Wyoming. So it actually has the coal that they mine is low cost coal, and also with the rare earth minerals, really that dual focus combines both the energy resources and critical mineral production. Now, they will be able to, once the plant is completed, they estimate they'll be able to meet more than 10% of America's 10,000 tons per year of total rare earth demand, nearly all of which right now is sourced from China. They just declared a stock dividend. There's a couple of nice articles if you're interested in following up on Ramaco. There's a Forbes article in July of 2025, and there's a nice article from the December 2024 in Coal Age magazine. So you might be asking yourself, well, what's the difference between MP's Mountain Pass mine and the Brook mine in Wyoming? Well, I'll tell you. The Brook mine yields mostly the lighter rare earths, especially cerium that's used in water treatment. And MP also has to deal with radioactivity in its ore, which is not present at the Brook mine. So the Ramaco Mountain Pass or Brook mine will be the sole domestic supplier of the heavier, more valuable rare earths. And interesting, the CEO has a different perspective on taking money from Uncle Sam. He's not looking for any. He doesn't want a direct investment. Rather, he's actually looking for to have the government set up something like the Strategic Petroleum Reserve, which would be a national reserve of rare earths and critical minerals. So I thought this was very interesting, plus the fact that they were profitable. Any comments, guys?
Can you give us a ticker for Ramaco, Betsy?
Sure, it's METC. M is in Mary, ETC. So
Yeah, for met coal, right?
Met coal. Yeah. You know,
yeah.
my only comment would be, do you know how much ammunition you're giving me with Maria Bartiromo and Citadel and I've got Sheridan, I've got Kevin Costner images coming up here. Whoa.
Mark, we're talking about companies to invest in here, right?
Yeah, I don't think Kevin Costner's got a shovel in his hand.
All right.
I will say, Betsy,
He might next week, I'll tell you.
maybe as a devil's advocate, we did get interested and talked a few times here about Ramaco when the discovery of the rare earths was first made. You can see it because you see the stock burst up. Was it early last year, I think? And there were a few articles that came out that were skeptical of it because they said that rare earth presence in coal mines or coal seams was not unusual. And so then the thought was, well, particularly if coal on its own is in decline, not for metallurgical coal, but for coal for energy, would that be something that mines that would otherwise idle might switch to? And I haven't seen anything come up to that, but I would encourage anyone who's simply listened to the company discuss about it to kind of look more. And it's beyond my expertise in terms of the industry, but there are some thoughts out there that this is rare because resources haven't been developed, not because they're not in the ground somewhere.
Yeah, I'll bet that Fluor reference that you mentioned is actually is examining that subject. So I'm going to look that up too.
Yeah, I would. That was going to be my response as well to Matt. And I didn't get a chance to look at the 10K, but the assessment may be attached to the 10K, much like when some of the other companies like US Mine and US Lime Minerals, they attach their assessments, their reports to their 10K. And so you can actually go through those, particularly if you've got an engineering or a mining background, and make some sense out of them. But yeah, I don't think Fluor would be involved in this company if it wasn't.
There's something there, yeah.
Yeah.
All right.
Okay, so I know we're running out of time, so let me go quickly to Uranium Energy Corporation. This is another small company, not profitable. Again, a find from the Cowboy State Daily. So let me just speak to uranium a minute. Wyoming has been they've been mining uranium in Wyoming for many, many years, even in the 1950s. I grew up in a little town called Lander, and they were mining uranium, 14 miles away. The predicted 2025 supply deficit for uranium is about 20 million pounds. By 2040, it might reach as much as 130 million pounds. So demand is rising, spurred on by AI power and the data centers and whatnot. So we got to find a source for this. Now, the U.S., and I cited the EO earlier, so the U.S. has chosen to revamp a home nuclear fuel supply chain. And really with uranium, what we're witnessing is the changing of an era to the acceptance of nuclear energy. If you want to go forward a slide, Mark, I think you have a couple slides there.
Yeah.
Okay. So what this slide kind of, it tells you what sets uranium energy apart. One of the main things is, well, they've done some acquisitions, and they have a 12.1 million licensed production and a strong balance sheet. We always like to see no debt. This company has no debt. So that's one of the big key factors. The other key factor is actually the fourth one down on this slide, which it says large physical uranium inventory. Excuse me. They have about 1.4 million pounds of already mined uranium for sale at any time. They don't have any long-term contracts for that uranium. So that's good because that means they can monitor and benefit from the rising spot prices. The current spot price for uranium is about $76, $77 a pound, and it's projected to go into the mid 80s according to some of the things I've read. They do have some cash on the balance sheet. They got about 271 million of cash on the balance sheet. They have 175 million pounds of historical uranium reserves. Now, this is an old assessment. They need a new one, so they're going to be doing that. The Sweetwater complex, which we'll be talking about more here in a minute, that's that 12.1 million pounds per year has been authorized for mining, and the capacity is to join a supply chain now, which is now dependent 95% on foreign imports. So if you go to the next slide, please, Mark. Okay, so this company is not just a one-hit wonder. You've got projects in Canada, you've got projects in Wyoming, Texas, and Arizona. Three of these projects on the left, this hub and spoke idea in Uruguay and Sweetwater in Texas. This is key also. These are in situ recovery situations where they're mining, in situ in the United States. The other ones in Canada are conventional mining where they're injecting leaching solutions into the mine. So the Sweetwater is actually the largest uranium complex in the US. The neat thing about hub and spoke, or the good thing about it, is that there's no need to rely on external plants or outside refineries. There is the Sweetwater complex is anchored by the Sweetwater processing plant, a 3,000 ton a day conventional uranium mill. It's fully licensed and permitted by the state of Wyoming. And it is the largest uranium production facility in the United States with a dual feed capability. You can go to the next slide, Mark, please. So this is just a picture of it with some of the details on it. You can see that the hub and spoke kind of idea and all the different places they will mine to and bring to that facility for processing. Uranium Energy, the symbol is UEC. Uranium Energy is a member of the Russell 2000 Index. And, as we know, the primary risk lies in the volatility of the remaining market, because it is a commodity market, as is all these companies. And, as changes of political power, the commodity market fluctuates, all these things can affect these companies and affect the price of their products. So,
very cool.
Thank you for.
Thank you, Betsy. I can't wait to put Kevin Costner and his family on that map. to the right. All right.
Mark, before you get off this slide, Mark,
Yeah.
could you just for my information, that scale is that a 10-mile
10 miles.
long scale?
Yeah.
Okay, great. Thank you.
Yeah, I might have to find a slightly bigger map to put the ranch on there. All right, just real quick, I just wanted to point out that we will be proceeding with this dive into the smaller companies as we always have in the past. And I just wanted to throw this one up here to pique your interest. What we did here a year ago was look at virtually all of the companies in the Vanguard Russell 2000 Growth Exchange Traded Fund. That's VTWG. Betsy just mentioned that at least one of these companies is in there. These were some of the companies we were most interested in a year ago. And again, we look for companies with earnings, unless it's one of the exceptions, like Ken's nuclear companies last October. But kind of looking top to bottom, obviously we're fussy about growth. We don't want them to be too big. We don't like companies with negative earnings unless they're the exceptions. Again, just from top to bottom, I do think we'll pay quite a bit of attention to year-over-year projections for sales. But I draw your attention to that last column and look at what's possible. If you can identify some of these for the year going forward, I mean, the average on these is 86%. I mean, that's just a wealth, a trove of opportunity. And Betsy, I think you'll be coming back to talk about Joby and others in days ahead.
I will be happy to. Thank you.
All right. So with that, quick reminder, the book comes out on the 16th, and we will be taking a closer look in the vein of smaller companies if they're there. Quick reminder that we do archive all of these sessions on YouTube, so you can grab either the roundtables or the bull sessions there. And Ken, the map on the left is for you, for your travel plans. The fall colors map. And the jackpot on the Powerball is up to 1.3 billion. So that's kind of
that would be a non-core investment.
That would be a non-core. And when my wife and I win that, there will be signs that we won. All right. Anything else here, sir?
No, we've kept the questions answered here, Mark, and there's the only thing that I think I should talk to Betsy about is that Mr. Emmerich, when you were talking about Wyoming and horses, he says, quit horsing around. He can't resist. So he's out there in the audience taunting us. All right.
Well, I can't tell you how much ammunition I have here. She mentioned Maria Bartiromo, Ken.
Okay, next slide. Come on.
And I'm going to have to subscribe to the Cowboy State Daily, apparently. Wow. Good stuff. Thank you, Betsy.
Oh, you're welcome. Thank you.
I do want to mention, Mark, that our roundtable is coming up in just a short amount of time. Our September roundtable is going to be on a different date. We will have the August roundtable on the 26th. And then, folks, if you're doing a calendar in advance, the September roundtable will be on the 23rd, not on the last Tuesday, but it'll be on the 23rd. So all in all, we'd love for you to be at both of them, and you can register at Manifest Investing. You can get a registration, or at the Mid-Michigan website on Better Investing, either one.
All right. So with that, I will go back to crunching some numbers. And can you be careful? I know you're traveling down to North Carolina to meet with a room full of excited investors this weekend.
They have a really nice attendance down there for this weekend, and I'm looking forward to meeting the North Carolina investors, the Tar Heels down there. Mark, Michael wants to know, what was the Vanguard symbol again? And I'm not quite sure which Vanguard symbol he's talking about. Michael, if you're still around, if you could just clarify that just a touch, we'll get you an answer.
I'm sure he's talking about this one. It's a Vanguard 2000 growth. It's a Russell 2000 growth. And we basically make the distinction between the growth and the value. The value is where you can find some distressed merchandise, but we like to pay attention to the growth.
What is the symbol on this one, Mark? This isn't VUG, is it?
It's VTWG.
Okay.
VTWG, and we will be digging deeper into this one. Trust me.
Okay. Again, for those of you out there, T like Tom, WG.
Yeah, Vanguard TWG.
Matthew wants to know, which chapter in North Carolina are you visiting? And I'm visiting the North Carolina chapter. They only have a single chapter in North Carolina. I'll be speaking in High Point, North Carolina, which is just outside of Greensboro. They do have a virtual component to that meeting. So if you would like to come to that, if you go to the North Carolina website, on the Better Investing website, you'll be able to find a link to join the meeting virtually. We'll be speaking to a live audience as well as a virtual audience this coming Saturday.
All right. So with that, we will continue our jaunt through the smaller companies next Tuesday. Thanks again, Betsy. Thanks, everybody.
Yeah, thank you so much, Betsy, and good afternoon, everybody. Talk to you next Tuesday.